Nvidia's 9.3% Nebius stake. Will your AI strategy collapse next? Nvidia's 9.3% ownership stake in Nebius is a strong confidence signal. But you should remember that strategic backing alone never guarantees long-term shareholder returns or sustainable AI infrastructure success. Nebius shares have surged nearly 250% over the past 12 months, lifting its market value toward $46 to $49 billion. But you must separate market excitement from long-term execution capability. Nvidia had already invested $2 billion into Nebius during 2026, proving this relationship extends far beyond a simple financial investment and reflects deeper strategic AI infrastructure collaboration. Nebius also secured approximately $6.3 billion during the first quarter of 2026, giving you clear evidence that investors continue aggressively funding AI cloud infrastructure expansion worldwide. You should never mistake investor confidence for operational certainty because L-Impact Solutions believes execution, disciplined capital allocation, and sustainable cash flow always matter more than headline-grabbing ownership announcements. Nebius is rapidly expanding GPU clusters across Europe and North America, giving you another reminder that enterprise AI demand increasingly depends on scalable, high-performance computing rather than traditional cloud infrastructure alone. Global enterprises continue investing hundreds of billions of dollars into artificial intelligence infrastructure, while Nvidia remains the dominant supplier of advanced AI accelerators supporting this extraordinary technology expansion. Despite impressive momentum, you should recognize that AI infrastructure remains one of the world's most capital-intensive industries, requiring continuous spending on GPUs, networking, electricity, cooling, and new data centers. Strategic technology partnerships increasingly shape enterprise valuation because they strengthen financing access, customer confidence, and infrastructure scalability. But you should remember that sustainable performance ultimately determines lasting business value. Nebius aims to deploy more than 5 gigawatts (GW) of AI computing capacity by 2030, making disciplined execution increasingly critical as infrastructure complexity and investment requirements continue expanding. Annual capital expenditure expectations have increased from $16 to $20 billion to approximately $20 to $25 billion, showing you how rapidly the global race for AI compute capacity is accelerating. You should ask whether soaring AI spending will truly generate durable profitability because L-Impact Solutions warns that infrastructure businesses succeed through efficient asset utilization, not revenue growth alone. Nebius reported almost an 8-fold quarterly revenue increase, yet you should understand that depreciation, financing costs, networking expenses, power procurement, and GPU replacement can quickly erode profitability. Nvidia simultaneously serves as GPU supplier, strategic investor, technology partner, and commercial provider, meaning you should carefully evaluate concentration risks across the rapidly evolving AI infrastructure ecosystem. Higher global interest rates are increasing financing costs, while investments in electricity transmission, cooling systems, networking, land acquisition, and engineering talent are extending infrastructure payback periods for enterprises. You should treat Nvidia's investment as strategic validation rather than guaranteed success because L-Impact Solutions believes recurring cash flow, diversified customers, and operating margins ultimately create durable enterprise value. Nebius generated approximately $399 million in quarterly revenue, representing nearly 684% year-over-year growth. But you should judge performance through sustainable operations rather than impressive growth percentages alone. Every additional $1 billion invested into AI infrastructure should be measured against return on invested capital, utilization rates, depreciation schedules, and committed enterprise demand before expansion accelerates further. Nebius secured a computing agreement worth more than $1 billion with Reflection, reminding you that long-term enterprise contracts strengthen revenue visibility, financing flexibility, and infrastructure utilization during volatile market cycles. You should diversify beyond one technology ecosystem because L-Impact Solutions recommends software portability, interoperable cloud architectures, diversified suppliers, and flexible procurement strategies to reduce long-term strategic risk. Financial governance becomes essential when executive dashboards continuously monitor GPU utilization, recurring revenue, EBITDA margins, operating cash flow, debt coverage, and capital productivity to protect long-term shareholder value. Nebius expects to deploy over 5 gigawatts by 2030, while quarterly capital expenditure has already reached approximately $2.5 billion, emphasizing why liquidity planning should remain your constant executive priority. You should diversify both technology infrastructure and customer industries across healthcare, manufacturing, financial services, government, software, and research institutions to reduce dependence on a handful of hyperscale clients. Strong operational governance means you consistently monitor GPU utilization, infrastructure uptime, customer renewals, revenue per deployed GPU, free cash flow, operating margins, and return on invested capital before problems escalate. You should strengthen supply chain resilience through multi-source procurement, long-term supplier agreements, inventory planning, and geographically diversified infrastructure, because L-Impact Solutions sees resilience as your strongest competitive advantage. Every major AI investment deserves rigorous scenario testing against higher interest rates, slower enterprise demand, electricity price volatility, financing pressure, and delayed customer deployments before you commit additional capital. Ultimately, Nvidia's 9.3% Nebius stake highlights tremendous AI opportunity, but you will create lasting competitive advantage only by converting capital, governance, customer diversification, and execution excellence into durable economic returns. Is your AI capital strategy ready if Nvidia's bet falls short? Comment your answer below. For more strategic analyses, visit our business consultancy website. The link in description below. Thank you.